following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday and market days. Of course, yesterday was a holiday. I hope everyone had a good vacation day. And also a very nice Valentine's. And we're looking at a market here that certainly is struggling. And when I did my homework over the weekend, my guess was that there would be some kind of a digestive phase in the next day and a half. Dow's down 49 at 17,970. S&P's down 5. Hey, that's good. They're in sync. And down at 2,092, you've got the comp index. What is the comp index now? Let's see. It's down 8 at 48.85. And what's really kind of interesting at this particular point is that gold, with the Greek debacle going on, well, the hesitancy over in Greece because of what to do, gold should actually be up about $28 or something like that. Instead, it is downright, whoa. Oh, that's down 47. Let's see, gold is, where is gold? The GLD is down 213. That's very interesting. And gold's down 20 at 1207. Silver is down. Copper's down. You got platinum down. You got crude oil, and that's going to be very interesting because crude oil tried to work its way high. It's kind of stuck in this range. Remember, the H goes to the M pattern, if you know chart patterns, and it's kind of stuck is in the 51s. Now, what's really important to me is I was expecting if there was some kind of a pullback today, then this is the test. It's going to be really important to see if bonds, which are trading down $1 in 3/30 seconds at 144 and 26/30 seconds, it was very important for me to see whether or not the money would flow back into bonds if the market was pulling back. And this says to me, down over a point, the TLT down 89 cents at 110.2730. Right there, went right through that little B, right there. Where is the B? Give it back. There it is. There's the B. And the weekly chart this is not good for the weekly chart, not good at all. So this, I have to say, this could still be saying money is going into stocks instead of into bonds. Fascinating. We're going to see how the automobile companies hold up here. There's this Apple scaring auto industries, a big headline on CNBC. What Apple auto industry? Come on, for Christ. Whatever they do, it will take years for them to get anything out. I mean, what is this scaring the auto industry? Because of their technology? Oh, I could just imagine. You know, I was talking to someone the other day who's been very keen for a long time on the Tesla. And I'd said to him a little while back that my disappointment, and I spoke to someone in the Tesla community, and I said, my disappointment with Tesla is that with such an innovative product, the car is not very innovative when you see it on the road. Unless you see the sign, you don't just jump out and say, oh, there's a Tesla. You say, what? He said, oh, that's a Tesla. And to me, that's disappointing because I think that the Tesla should have been, no matter where you went, they didn't have to do anything bizarre. It could have, the guy said to me at the Tesla, he said, well, they had all these criteria that they had to work in. What criteria to work in? They did a fantastic job with the battery, the body, they did everything. The design could have done anything. It could have been spectacular design. And I don't mean, when I say spectacular, I mean elegant. I don't mean bizarre with fishtails and all sorts of things. It could have just been really brilliantly worked out that everything about it was innovative. The lights, the tail, the front, everything. So I personally am. That's my grump, and that's not to say anyway. It's a beautiful car. There's no question about it. but I'm just talking about the design. So Apple comes along, their design is probably would be absolutely unbelievable. I don't think they're going to do it. Why would they waste their time doing that? Anyway, so that's my little rant. Let's go back to the market. So this is what I'm looking at. Money, if bonds have gone from 137 to 127, down 10, that is about 8%. That is a huge move because it had a spectacular move to the upside. Gave it back in this shape like an A, capital A, uppercase A, that makes it like an Eiffel Tower. So we're going to watch this really closely. Why? Because in the context of the monthly chart, you have almost certainly got the potential for a peak E, because you've only got 2 weeks now, less than 2 weeks, until next Friday, week from Friday, to make the high. I don't think it can do that at all. And that means that even in March, if there's a big pullback, March, April in the market, bonds should maybe bounce towards the 133-ish area. And then we'll see what happens if they do bounce. So this says, yep, right now money is still coming out of bonds and probably going into certain sectors of the stock market. One of those sectors is probably the sector that it keeps going back into, the IBB, the iShares Nasdaq Biotech ETF. Amazing. I think the way it's acting right now, I cannot deny that Roman candle that we were looking at is going to have to wait, because it's already, well, you have to wait for the week to see if it closes above that candle. If it closes above it, that negates it at least for a short period. It'll be back there, but not until it completes the upside. And the upside says, good chance it's going to go to leg D above 329.20. At that point, we will consider once again going to the short side, the dark side of the IBB. All right, now let's just go on with our story. I can't remember now because I just did Steve's show. He had to be away for the hour, so I've got... I can't remember where. I'll just repeat it. If the VIX index trading at 1595 up $1.26 pushes above 1661 at the close today, the 1707 to 1740 level will be the resistance to monitor. A close in the 18s anytime this week says, maybe it's not going to be this week that goes to an all-time high. It'll have to be the following week. We'll be watching that real closely. But in the meantime, those are the parameters above 1662. Start watching out for those 17, for the 17 level. Above 17, you got 1740 was the strong resistance. Any close above that is going to be very negative for the market. Meantime, it is stuck in this trading range based on the weekly chart. 1688 is the 9-period exponential moving average. We'll watch closely on a weekly basis. Now, let's do this. In the Apple has gone to an F unless it's recycled. So this is F/B. Just for now, I'm going to call it F/B because the MACD is at 90. The MACD is very strong. Stochastics at 96 in the daily. The weekly MACD is good. Stochastics at 88%. And in the monthly, the stochastics at 91 and the MACD is very good. There is no sign yet, even though the lettering says, be a little careful. There's no sign yet that you could get anything but a little bit of a pullback, 3-4 points in Apple. But the chances are, let me just do that if the general market goes higher, Apple will go higher. And if Apple goes higher, there's a chance that it's going to help the QQQ series. And when I said to subscribers this morning, QQQ series looks really strong. Yeah, and you got 98% in the stochastic. That is really powerful. And usually it doesn't go from 98% immediately down to 80%. You don't get an immediate turn. So if there is no immediate turn, the QQQ suggests that it could be leg B in the weekly chart. And that would suggest, there again, that you've got a couple of weeks to go, quite a few weeks to go, in fact, before you can get your leg D. If it's E/B with an emphasis maybe more on the B, if it's an E, well, you can go to an F and then turn down. So we're watching it because nothing here is technically weak, except that the week has only started in the, for the weekly chart itself. So I really shouldn't be talking about it as if it closed. For the week, it's just started the week. So let's talk about it a little bit more later in the week. But the monthly has recycled to G/C. Tremendous emphasis, I would think, says C is probably the notation we're looking at. All right. Now, let's look at a couple of other things. The XLE The XLE has had a fabulous move. It's gone to leg D. The weekly chart is still suggesting that there's an H to an M pattern, lowercase h to a lowercase m pattern unfolding, unless, and this is going to be very important, it's at 81.73, down 31 cents. If the XLE, the S&P Select Energy Spider ETF, starts to trade anywhere in the 82.30 or higher area, well, obviously in the 82.30 area, that's going to suggest that the resistance in the moving average at 32 EMA right there at about 83.99 would become a target. And that's really important. Why? Because the XLE has been on a tear to the downside for months, since it made its all-time high of 101.52. I said all-time high. Let me just double check. Yeah, all-time high at 101.52. Let me just type that in. 101.52. 101.52. I've always liked the number 101 visually. It's like a sandwich. Okay. Now what we're looking at is I want you to see how an Alcoa acts today. Not so bad, minus 5 cents at 15.77, and how a U.S. Steel is acting. Look at that. If you get the heavy cyclicals like U.S. Steel and perhaps Alcoa coming back on strong, I read an interesting article. Was it in the Boston Globe? Yep, it was in the Boston Globe, and it suggested in the financial section that it costs about $700 more to do the painting job. What they did is they took was it Consumer Report? No, it was some company took a Ford, is that the 130s or something, the truck, and they took a sledgehammer and banged the side of twice the side. And they took it to a body shop, just a local body shop, or maybe it was a dealer, I don't know. And instead of, maybe it was $2,200, it cost $2,900, something like that, to repair. So what they said is the repair work was perfect. You could not tell any difference, but what you could tell was that the price was higher. So that's the difference. So they've got the lighter body weight, and the strength is such that it does cost a little more to do the repairs. Okay, that's the way it is. Now, what we're looking at is that U.S. Steel, monthly chart and weekly chart, they leave a lot to be desired. They are turning, but so far, that's just the start of a turn. The daily chart is actually quite good. It's made it almost a V-shaped pattern, and it's suggesting it's taking a little bit longer, right there, to get to the left side high of 27.71. All right, we've got a break coming up, and Basil Chapman, Dow's up 43, S&P's down 4. Not bad action, I must tell you. We're talking about U.S. Steel. X is the symbol, trading at 26.16. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, usually I get tons and tons of junk mail. I got one that I actually read because it said, results show almost half of Chicago Auto Show. When I see Chicago Auto Show, any auto show, I see what it says, and says Chicago, Illinois, February the 17th, 2015, nearly 44% of adults attending this year's Chicago Auto Show, CAS, are planning to buy a car or truck within the next year, while almost 70% say that they will buy within 2 years, according to a survey conducted by Edmunds.com, premier destination for car shopping. Polled nearly 1,000 attendees. Yeah, that's the same as over here. A majority of people said they're there to look seriously at the auto show back in January. Was it January or February? Whenever it was. Okay, so we're going to go to Pat in Dennis, Massachusetts. Hi, Pat. How are you?
Good. How are you, Basil?
Well, thank you.
I think those homes you were talking about are here. Remember you were saying they had to be, well, ones we saw before weren't outrageous enough?
Yes.
Well, I don't know if you remember the Spelling Mansion. She had the largest house at one time, and she had 3 what they call boxing rooms, where 3 separate rooms for wrapping presents.
Oh, like the English Boxing Day, the day after Christmas, where you box.
Right.
Yeah. Okay.
Right. So then we went from mansions to mega mansions, and now they're producing what they call giga mansions, Giga.
Oh, you needed a title. I should have thought of that myself. Giga mansions. That's beautiful. Giga mansions, yeah? And they starting to build them on the Cape?
No, they're building them out on the left coast.
Okay.
Now
Yes.
these homes run from 50 to 90,000 square feet.
90,000 square feet as a house. Unbelievable. Yep.
Yeah, and it's not enough to have one pool. You have to have like 3 pools.
3 pools. Oh, salt water, mineral water, seltzer water.
and you just can't have a media room. You have to have an indoor theater that seats 100 or more people with theater seatings and special surround sound music and whatnot.
Well, the implication there is that not only do you have room for everyone, you have parking outside for everyone, huh?
Well, some of these people are in California trying to stop it because they showed pictures of these huge giga mansions going up on the hillside, and they're wondering, if there's too much rain someday that they're going to come sliding down into their houses.
Oh, my goodness. Oh, you can imagine. Yeah. You don't want to get hit by a giga mansion, right?
I just thought I'd let you know. If you start following them, I think you'll find that these are the houses you've been anticipating.
Yeah, I'm getting emails all the time. I'm trying to think of one that was sent to me the other day. It was 54, I think, million. So we're starting to get there. But you know what, Pat? We aren't there yet. I mean, it's hard to believe, but we aren't there. It's going to be something that even the most cynical of people says, wow, that is big. So I'm expecting an amount that is really up in the triple digit millions for a house. I think that's what I'm looking for as a sign, because excessivity, and that's what I'll be talking about on Thursday night in my webinar, excessivity is part and parcel of the phase that takes you to very serious top. So we'll see if we're going to get there. Hey, thank you. That's good to know. And in fact, I will start looking up the word giga mansions.
Okay, bye now.
Thank you. Bye, Pat. So let's go to Travis. We go all the way across to St. Louis. Hi, Travis. How are you?
I'm fine. How are you?
I'm well. Oh, you're going to talk about CLVS? Beautiful.
Yeah, let's talk about it. It's been about a month, so let's talk about it. I still have half of my position, if you remember back around the middle of January.
You took profits at Peak D, and then you stayed in the rest. Good.
Yeah, I'm still in half. I never got a chance to add the other half back because it never gave me a chance, and we've not got a pullback in the market. So that's my fault for being concerned about the broad market and letting it spread into my thoughts on an individual name. But I still love the name, still think it's going to Peak D in the monthly, but I don't know that I'm going to get a chance to add my half back. What do you think?
So here's the thinking. I did this the other day for subscribers, and I said, you know what? I don't want to get into something because we've missed it on the way up. I'm not going to put in a buy for it right now at the price, at a higher price. I'm going to have patience to let it come back to the price that I wanted at. And the thinking is, it's more hubris. Actually, it's more to do with the trading gods, lowercase t, lowercase g, in the sense that you miss something, and then you do all your homework. You say, that's the price I want. Now we've got a break coming up, so let's hold off right there so I don't talk through the break and get my engineer mad. Hold on, Travis, because CLVS, Focus Oncology, is trading at $71.99, up 320, and we'll talk more about the psychology involved as soon as we get back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back, and we're back with Travis in St. Louis, and we're looking at CLVS Clovis Oncology Inc. And Travis has had just a fantastic plan for a long time. Love the company, and he's been trading it and positioning himself in it for a long time. And was a little upset because he was going to add to a position he took off. He did not get a chance to add to it, and it took off without him in this last lap for the add-on position. But two things are going on. One is you've got your core position, and that's exactly what you want. You want to be able to manipulate the trades independently to the position play. And the position play is the core is there, and you're expecting leg D to occur because it made a peak C at 92. Did I write that down? 93.33. And that was 93.33, and that was back in 2014, March of 2014. So that's got a long way to go still, 20 points. So this is what I'm going to suggest. If I'm correct, and of course there's no guarantee about anything, but I have to go with my methodology. And if I'm anticipating that there will be nominal new highs in the Dow and the S&P and in the other indices, but at least for the new highs, you would get, and the Qs, you'd get new recovery all-time highs. That says that there's a real good chance that CLVS, which also is kind of not in, I don't think it's in the IBB, but it's part of the crowd, in the sector, because it's the IBB, it looks right now like it wants to go to leg D in the weekly chart. That suggests to me that two things can happen. Instead of the other half a position that you would have put on, it's in leg C right now. It's 71.98, just a little bit off today's high, and in fact, a little bit off the recovery high. Leg E in the weekly chart, you could add a position now saying, but it's got to be, don't rush to do it. Take even the whole day to do it. Say to yourself, hey, I've missed about, let's be conservative. Let's just say you've missed 3.5, maybe 4 points, because you might not have got back in correctly. You might have had to get back in between 67 and 68. So let's just call it 4 points. Therefore, what I would do is, if I was you, I would think about putting some part of the half position back in, saying, well, it should still make leg D. The weekly is still very strong. The daily has gone back to over 80%, 80% in the stochastic. MACD is just turning positive. And the monthly chart, my belief is that it should still go to a higher high, an all-time high above 93.33. Therefore, you're looking at a 20-point move to the upside in the core position. But the shorter term position, if I'm correct, once again, which says within 2 weeks, maybe 3 weeks, we should make some kind of a top, and a top of shorter to intermediate term, meaning 4 to 6 or 8 weeks of consolidation. It says maybe not put the full position in, but add a little bit now, and even of the position that you're going to put on now, you say, but I will add another little bit at about 69.50 if it can get there, but it's got to be before leg D is made. Once daily leg D is made, I would wait for time and price, even if it's only back to 68. So on a shorter term position, you can get in, thinking that if C extends tomorrow, that raises the base, and this could go for a week before you actually make a peak D. It could even go D and very quickly to E without even stopping you out. But at least you're there for a trading position. And if you put yourself in for at this point at 72.25, 75 cents, a 1% stop, and you're expecting to get maybe 2.5 points, maybe even 3 if by the time it concludes this move based on the daily chart, I think that's a good ratio. So that's just my thinking. And that way you're at least participating in any further up move with the extra trading position. You don't have to worry about the core position. And if it starts to pull back, you're taking a very small hit on a smaller amount. It's just an idea. I thought I'd just throw it out to you.
No, it's a great plan. It still allows me to participate in the shorter term. I understand that completely.
Right, and then the 120-minute chart has got an extension here that's E/C. The way it's acting, it could pull back to the 69.71 area over the next 3-4 days if there is a sudden downturn in the market or in Clovis. But I think therefore, that's a reason why you can make a fairly tight stop, because you want to trade it. This is a trading position, and you want to be able to go with the flow, but you also want to minimize and mitigate any downside move.
Okay.
All right, that's just my thing. Hey, congratulations on keeping your eye on this and keeping your position. That's just great. I mean, that's for our listeners. It's a great lesson. Thank you very much.
I thought I'd at least share my thoughts on it again. I know there may be somebody that may be involved in it now that I've talked about it for so long.
I think there are, and I'm hopefully they're doing as well as you are. Congratulations, right, Travis. Keep it up.
Thanks, man. Thanks, Basil.
Good. I look forward to hearing from you again. Thanks. That's Travis in St. Louis. Now, folks, this is going to be very important because the Dow's come back to minus 20. S&P's only down $1.84. You can see that what we're looking at is something slightly different. That over the last week or so, every single pullback has been met with buying. And there have been some very strong moves to the upside, very, very few Let me just show you the chart right now. I'm going to go to the SPX, to the S&P. Look, there's just that one peak A, and now even today we're trying to challenge the Friday high. I don't know if we'll make it above 2097.03, but so far this is absolutely this is ideal. This is what you want to see in a move to the upside. So, as I said before, I'm looking at stuff that says, geez, who would have thought that U.S. steel would move higher? That's why I'm watching Alcoa to see, is it going to participate or not? Look at the way Ford is acting here. Ford is pulled back a little bit today. It's at 16.15, made a peak there. I'm expecting a little bit of a pullback here. General Motors acting pretty nicely, pulled back down 29 cents, still acting very well. You've got Chrysler. What was that again? Fiat Chrysler, FCAU. Oh, look at that. Peak D recycles in an instant restart and goes A, B, C. Peak C, brand new C. It says it's going to go higher. Fiat Chrysler looking very good at 14.37 right now. Getting a little toppy in the 120-minute chart. But hey, if it's U.S.-centric, you'd expect, even though it's Fiat Chrysler, it's really made up of Chrysler products, yeah? This is good action. Look at Toyota Motors. Toyota Motors, I looked at the other day and thought, gee, look at that big spike to peak E, and then it went F and a G. I don't know if that's a G or brand new A, but that's a C in the weekly chart, also acting well. Now, what's funny is I'm talking about the American car companies. We know that there are Toyotas coming off the lot from the factory that are probably huge percentage of American parts, but you're thinking of it as a Japanese auto company. So when I say that I believe that the American auto companies, I'm just talking about the traditional names, the Buicks, the Cadillacs, Chevys. That's really what I'm talking about, and I'm suspecting they're going to have their day in the sun. They're starting to have their day in the sun right now. One of the reasons why we belong one of these auto companies. Now, let's look at this. When we're looking at interest rates, so I keep getting emails from not keep, just a few people send me emails. Here's one that says, why don't you talk about the billions of dollars, the $1 billion bank heist? Are you one of the special inside people? That's a joke, I'm sure. No, of course I'm not one of the inside people. And what am I? I don't even understand. What would I do? You cannot. I'm not going to be talking about the banks when I'm looking at the stocks. I'm looking at the stocks. I'm not looking about the history. And that's important. I'm looking forward. I'm not looking backwards. I don't get into it. It's like politics. It doesn't do a thing. Just keep looking at what you can do. Let's go to Marvin in Orlando. Marvin, how are you?
Hi, how are you, Basil?
I'm well, thank you.
Yeah, I was trying to find out if TBT would be a good entry level at this point.
I'm embarrassed. I actually had an IM just recently from someone who said, what about the TLT and the TBT? And I said, looks to me like the TBT's at this right now. This is the exact day of the turn. I think TBT is going to do much better. What is TBT? TBT is the ultra short Lehman 20-year Treasury bond, the inverse. So in fact, what it does is that when the bonds when the TLT declines, this goes up. When the TLT rallies, this goes down. My only reason why I actually did not get into it is my belief that rates, I don't have the chart right now. I can put it in right now, TYX. Now, let me just ask you a question. Are you involved at all? Do you have the TBT, or you're looking to get in, did you say?
No, I don't have a position.
Okay. So this is the tough part right here. When I'm looking at the TBT, I'm suspecting it because of the move that it's had, this V-shaped pattern in a shorter time frame from the plumb line low. in a much shorter time frame, breaking above the previous peak of 26.22 back on the 9th of January, and then even the candle gap down from the 5th of January at 26.74 is trading at 26.91 right now. Everything about it suggests that it should go a little higher to a D. My thinking is that the general market has about 2 weeks, maybe 3 weeks of just struggling to make higher highs. It'll do it, but it's not going to be easy to do. That's number one. And number two is that if that's the case, when the market pulls back, bonds should once again be favored. And that would say that the TLT could have a 50% retracement to the upside. And then we're going to have to make decisions about many things. And we'll see if that's the move that says that the market is pulling back to a major support level that's going to trigger a very strong buy signal. This is just my thinking. And that would suggest that if you were to buy at 26.95 right now, to buy the TBT, you could have some upside potential towards 28. This candle right here, this candle. 28.33, not a bad move for a bond fund, but at the same time, I don't think this is a big move that's going to last long. And my reasoning is that because there's competition decreases prices, whether it's the commodities, whether it is the commodities of semiconductor chips, whatever it is. And I think that what we've got now is competition for yields. Yields have become a commodity in a sense. And as such, it tells me that, yes, you could have a little bit more to go. And if you're looking at this as a position play and you got in maybe on the next pullback, say it's at 26.95. Let's say you were successful at getting in between 26.50, 26.28, and 25.77 is the 200-period moving average, and it never hits that if that's your stop, and instead it goes higher. You could stay in that position in time, and that would say the first week of March, you've got to think of getting out, wherever it is. That's one way to do it. And that would say, well, if it moves up 1.5%, 5% from here, 5% is a good gain in a market like this on individual. Let's call it an equity for now. So that would not be bad. And if it goes higher, that's great. So all I can say to you is because I see the market going higher, bonds should meander in the lower range for a little bit longer before bonds have a pretty decent rally. I'm suggesting that if you want to get into the TBT, it's a little, I know it's only 40 cents, 50 cents, but we're not looking for that much of a percentage gain. At least I'm not for now. So I would say I would try to get it on a pullback towards, it's at 26.89. Somewhere between 26.40 and 26.30, and I'd probably say to you, I would have a 1% or a 0.5% even stop, or maybe maybe a 40 cents or 50 cent stop, pretty tight stop. Reason being, you want to see it go to leg D, pull back, and then continue higher. Coming off bottoms, you can recycle very easily if you aren't going to make the H pattern. I suspect there is an H pattern in the plan of the weekly chart, but not just yet. So here's my thinking. If you want to start a position maybe closer to 26.50s, I would prefer to get it before it's in leg D. It's already in leg C. But if you can get it in the next 2 days, I would take it, and then I would have a fairly tight stop. But you want to see it get into the 27.23 or higher level by Friday. I think time is on your side here, if it's going to work by Friday. And if that's the case, I would just ride it, and I'd make sure once you've got a 40-cent gain, if you get a 40-cent gain, don't take a loss, whatever, and then just see where it goes. That's the only way I would play it. Hope that helps you, Marvin.
All right, thank you.
Thank you very much for calling. We'll be back, folks. The Dow's down 22, S&P is down 2. I'll be right back.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back, and I just wanted to complete my thought there with Marvin, just to make sure that it was clear. I just wanted to say that if there is pressure throughout the world to lower rates, as long as that's happening, that should keep our rates lower. That's really the issue, and that would help bonds. But just in the shorter term period, we've got quite a bit of a pullback, 8%, I think it was, I said, in the bonds. We've got a nice move up in the TBT, which is the opposite, and the TYX is the yield, which of course is going to follow the TBT. And it looks to me like the weekly chart is right there. Monthly chart I really can't talk about because it's still a very ugly looking chart. And this is what I think we're looking at right here, that in the weekly chart, got a little further to go, maybe up to around about the 28th, and then I think we start to pull back and making that H pattern. And look in the monthly chart right there. See those H patterns? Arch formation going back down to the low. So this is a very good candle, but 28.93 is the 9-period moving average resistance in the monthly. Not a bad percentage, not as a trade, but as a position play, thinking it's going to be there for 6 or 8 weeks or more. I just don't think so right now. I think that we will be coming back. The yields will be going lower at some point. So here we go. Summing up, you've got, these are the levels I'm looking at. In the Dow, there should be tremendous support. The low today is, let me just quickly check over here. The low today is 17,951. You've only made a peak D. I see in the 120-minute chart, I thought it was a D, but it's not. So we could go above 18,037.41 for leg D. Okay, and that should happen in the next couple of days. More important, actually, if it's a 120-minute chart, it really has to happen by tomorrow morning this time. Now, what's really important about this in the Dow's chart, it's in leg B. It's either going to make an extension B today, or it should go to C this week sometime, and then to a D. The moment it crosses 18,103, it should do that in February. That starts leg D in the weekly. But because in the Chapman wave, I'm expecting Ds, that's what you expect, especially at all-time highs, it suggests that the S&P has, at a minimum, 2 weeks to go before it can make even leg D. That would imply that all of next week, if it makes a new high this week, all of next week it doesn't make a new high, and the following week it does make a new high for leg D. But otherwise, it extends it into early March. So in the meantime, back at the ranch, if there's no new high this week, all week, and we missed it by a fraction, 2097.03, you missed it by something like about 60 cents. Could happen. If there's no new high, then you have to, the next week we could see leg D, and that puts us sooner to making peak D in both the Dow and the S&P. All right, just wanted to get that out of the way. Where's the support in the S&P? Very strong support in the 283 to 281 area. 2,072 is the 9-period exponential moving average. I don't think at this particular time we'll pull back that far. You never know, but it just doesn't look like it. Looks to me like the 2000 and mid-80s is really very strong support at this particular time. So that's that. And the QQQ series, look at that. New high today. It's acting very well. This is leg B, and it should go to a C and a D, and the stochastics at 98%. You just couldn't ask for anything better than that. It's acting very, very well. So as we're about to wrap up, and we're going to go to the options hour, great show coming up. I'm not sure who's doing the hour today, but it should be just the usual terrific show. Stay tuned, and we got programming all day, Tuesday today. And don't forget my webinar right here. Oh, I forgot to talk about it. My webinar coming up on Thursday night. Go to the front page of TFNN on the 1929 match between then and now. I'll be back. Chad Coker.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.